Thank you, Wiki and MAS. Appreciate the introduction, and I'm so delighted to have Tim Grant and Fernando Luis Vasquez-Cal from SBI Digital Asset Holdings and SDX. We're going to start right off with the grand announcement that just happened yesterday. For those of you who missed it, I'm going to have Tim explain what is this joint venture, how did it come about. I love a good backstory, so tell me, guys, what happened here? It's pretty exciting.
Well, thank you, Sandra, and it's great to be once again at the Singapore FinTech Festival. Always a pleasure, especially as Sandra. This is coming on for our fifth year. I guess this is the 5th year. So we were part of the original crew. So what I'll do is let me give you a little bit of our background, and then I'm going to pass actually to Fernando to kind of pick it up and talk about how we've come together. So I think the most important piece of the puzzle here is that we are coming together. SBI Digital Asset Holdings and SDX, SIX Digital Exchange, have come together now publicly, and we have an intent to come into the Singapore market, which we see as such a crucial Asian marketplace, a crucial center for the whole of the Asian financial markets. And we're going to set up a digital exchange, very much in the same vein as what we've done in Zurich, but also Fernando will tell you they have a lot of activity in SBI Digital Asset Holdings, not just in Japan but globally in this space. So we're bringing a lot of experience. But I think I'll tell our piece of the story. You know, from the SDX side, we've been building this platform now for 2.5 years, and when we started this journey 2.5 years ago, and we took this to the SIX Group Board of Directors, which is a group of financial institutions, it's actually a group of banks. The original formulation this was always really think of it twofold. One, a disruptive play. We believe that this is we are the operator of a financial market infrastructure in Switzerland and now in Spain. So we're one of the top 3 FMIs, financial market infrastructure players in Europe, one of the top 10 in the world. But we see digital assets and distributed ledger technology as a core element of the future state. We see that as going to be really the rails effectively for lots of reasons in the future state. So that's point number one. We see this as a disruptive play, and we want to disrupt ourselves, and we're being very deliberate about that. Now, the second piece of that, which is where this comes in, is that we always conceived of this as being a global play. We see this as being something that solves for global liquidity. And with that, we had in mind through the last 2.5 years to engage in other locations around the world. And we always have had our eye on the Singapore market. It's very similar to the Swiss market for us. It has similar characteristics. It's a relatively small nation where the regulator and a central bank, in this case, Monetary Authority of Singapore, is pretty progressive in their stance in the space. That the society is pretty open to this new kind of asset class. And there's a lot of activity there already, and that's very, very consistent between the two. So when we came across our new partners, SBI Digital Asset Holdings, we found kindred spirits who saw it the same way. So with that, I'm going to pass to my new partner, Fernando, to talk about the SBI story.
Yeah, thank you, Tim, and thank you for having me here in the panel. So even though Tim and I have a very different backgrounds, both of us in our respective organizations see eye to eye about digital assets in general. And we also happen to share the same vision for the future of digital assets and how to realize that vision. On top of that, there was also common understanding that what we are trying to build here is the financial infrastructure of the future. And for that, we need partners who are in this for the long run. So for us, honestly, it was a no-brainer. There aren't that many organizations that are willing to make a 5-year, 10-year commitment to work with all the regulators and do all the boring stuff. Actually, I myself have been keeping an eye on, Tim's work and SDX work from the very beginning. And I knew that there were a few crazy incumbents that were willing to disrupt themselves from the inside, right? I myself pretty much like that. the SBI Group has been quite active in the fintech space for almost 4 years. We've invested more than $1 billion in companies like R3, Ripple, just to name a few. We have crypto exchanges in places like Taiwan. We have also crypto exchanges with different types of licenses also in the US and in other jurisdictions. And that said, again, we are going global. We want to build as I just said, right, the capital markets of the future. And for that, you need partners. And for that, you need the hub where there's a lot of regulatory certainty. There's clarity. You know what to expect. And so for us, going for Singapore was no brainer. And just by chance, I happened to have a few chats with the team. I found out that they were trying to, come to Asia and do so through Singapore. It's like, so for us, honestly, it was quite a quick decision. And I think that applies to Tim himself. It was very clear that, it was bound to happen, and it actually happened. It was actually pretty quick, I would say.
Well, thank you very much for giving us a bit of background, and it's pretty clear that setting up in Singapore for obvious reasons and for maybe not so obvious reasons was a natural home for this joint venture. But both of you mentioned something, I think, which is critical, and going to the topic at hand, which is global liquidity, asset liquidity that we're talking about here, and also building next generation capital markets infrastructure. I'd like for you guys to talk a little bit more about the shift, I think, that we're beginning to see, because when people think about current global capital markets, what do they think of? They think of New York, they think of maybe London, probably London first before New York, but we're increasingly talking about Asia, and in particular Singapore. And let's not forget, Switzerland, as Tim said, has cut its, frankly, its niche and reputation for being very proactive and pro digital assets, which is, something that's also very positive. So let's talk about next generation digital asset infrastructure. What does this mean for the traditional industry?
So I think the key for us, and I think this is part of the view that we share between our institutions. And remember, we're talking about two institutions that know what the current markets look like. SBI is a very big player in Japan. We're a very big player, and in Asia, across Asia, we're a very big player in Europe. We know what the current 20th century model looks like. And I think that's where everything starts. You got to know where we're coming from. You got to know who the current client base is. You got to know what they expect and what they've been used to. And there were, when you look back into the kind of formation of the current capital market infrastructure, you look at some decisions and choices that had to be made along the way, going as far back as the 70s and the 80s, going into the 90s, where the big parts of infrastructure were based on technology choices that were made at the time. They were made on pieces of the capital markets that came up at different times. So different asset classes, different times, different infrastructure, different rails. And then you have different regulatory regimes, all of which have evolved and changed over the last few decades. And when you look back at that, you have quite an extraordinary and fragmented world of pieces of infrastructure, and it's just the way that it came about. There's no, I think we all made the right decisions at the time, given the opportunities we had. Fast forward to 2020, and here we are, and we've got this new opportunity, which both of our institutions have been really diving into, which is how does blockchain facilitate a new kind of interaction, and ultimately at its core a mutualized processing layer. And we've been, and Fernando mentioned the R3 angle. When I was the CEO of the lab and research center at R3, that's when SBI invested in R3 very, very early, hence the beginning of my relationship with SBI. Right. And then you've got the digital asset part, and that's also, obviously one doesn't come without the other, but enterprise blockchain is something that is a standalone, that's being used out there in the world without the digital assets. But when you put the digital assets on top, finally, you've got value exchange. You've got a dimension, an order of magnitude more impact than you did with the internet in terms of its ability to create new outcomes and new business models. So I think the starting point for us when we think about building this new exchange and this new infrastructure together is this unlocks an entirely new approach and requires a new mindset, I think, to look at building this new infrastructure where we are not sort of shackled by the dominant logic of the 20th century. And I think that's where, again, we see eye to eye. We're not going to approach this and build a mini SBI or a mini 6. Nope. We're going to approach this and build the next step. And maybe Fernando, you want to pick up on that as well.
Yeah, absolutely. I would like to mention that it's not always necessarily, about IT, especially when it comes to traditional institutions, right? There's a lot of internal pushback. And part of that is due to the inertia of business processes that have been in place for decades, sometimes, right? So basically, you need to make a decision when it comes to adopting digital assets. Do you change your existing processes to make the most of the new technology and optimize your processes? Or do you retrofit blockchain and DLT technology with all its bells and whistles into the existing, legacy processes, which kind of defeats the purpose? So basically, people do not necessarily understand what the implications of changing, say, the way settlement works are. Doing things like digital currency, real-time DVP settlement may look good on paper because it minimizes counterparty risks and can help, reduce settlement costs. But what happens if the underlying plumbing breaks? Who can you call on a Sunday at 3 a.m. in the morning and shout at? Who can you blame? Right. What's the governance model? Yeah. So more than technology itself, I think that this is the main source of friction. I would say that most of the key stakeholders, especially the big names, understand the benefits that DLT and smart contract technology can bring to the table. Automation, process optimization, embedded compliance, you name it. What is less clear is the regulatory framework and what the governance model at the industry and corporate levels would be. So I think this is an area where incumbents willing to disrupt themselves, like SDX and SBI, and startups who have learned from the ICO, debacle will play a key role. So there's a lot of hand-holding that we'll need to do. And also, I would like to add that we as an industry should always keep in mind that we are building mission-critical public infrastructure, and that the standards should be adjusted accordingly so that we can provide world-class investor protection and servicing. The good news, I would say, is that big institutions, especially the big ones, right, are incentivized to do the right thing because failure to do so would risk reputations and revenue streams. So that would be my take on this.
Yeah, absolutely. And I appreciate you guys really emphasizing the fact that even though this is next generation and it's going to have some really cool offerings and features, at the end of the day, it is core infrastructure. It is the pipes that run. And frankly, if they break, that's when, very bad things can happen. You do not want an exchange, going dark or having breakdowns all the time. That is not acceptable as market infrastructure. And so I appreciate you guys mentioning that. And also, let's face it, it's a highly regulated industry. And frankly, to try to skirt that, it is, probably a massive misstep. Let's talk a little bit about Singapore and MAS. I know you guys touched upon this, but there is something very similar to the Swiss story and FINMA as well as Singapore and MAS. What is it about a favorable regulatory environment that allows for this kind of innovation and entrepreneurship to happen?
Well, look, I think my experience, we talked about the very first Singapore FinTech Festival going back 4 years ago, August 2016. And I remember that year when I was at R3, we had a discussion with the key decision makers at MAS and the government. And I remember them very quickly being very progressive and making a decision to get into Project Ubin. And here we are today,
right.
on a Project Ubin channel many years later, celebrating the fact that Ubin lives, Ubin is growing, Ubin has evolved, and therein lies the story. You know, it's a glorious full circle, and I was very proud and honored to be a part of the early phase, the phases of Ubin to really get that moving, and that was in many respects along, I think, with Project Jasper in Canada. With the Bank of Canada and Payments Canada, I think they were two of the very early beacons of progressive thought in the world, in the regulatory, in the central banking world.
Right.
And I think what you've seen since then, and just look at the FinTech Festival, look at how big that has become. Look at the stage that we have here.
Right.
Incredible to see all the speakers this week, you know, from everywhere. I mean, we it's everybody that matters. It's truly extraordinary, and that's no coincidence that level of speakership has engaged with this, because Singapore is seen as a progressive movement to be very open to look at these next generation opportunities, and for us at SIX, and I think it's the same with SBI. You know, we are in a highly regulated world right now. Right now, our home regulators are FINMA in Switzerland and the CNMV in Spain, and the relationship we need to have with them is sacrosanct. You know, we need to be partners with them. We need to be guided by them. They need to be guided by us. We're taking this journey together, and I think that's very consistent with what we see in Singapore, a monetary authority of Singapore that is ready and willing to be thoughtful, to take some risks. And when I say that, I mean I don't mean, you know, taking wild and abandoning to some carefree attitude. It's, you know what, we're going to have to slowly but surely eke out a new territory, and that, combined with the sort of the growing importance of Singapore as a financial center, just makes sense for us. But you know, this is for me coming from the European time zone where we're based. I think, Fernando, you'll have a perspective about the APAC region and the Asia time zone, which is probably even more poignant, I think.
So I would like to what you said regarding Ubin, right? One of the reasons it was successful is that you engage with the regulators at the really earliest stage, right? And this kind of sophistication and clarity at the regulatory level was one of the reasons that we always had, you know, Singapore in mind as our key hubs for all these digital asset initiatives, right? So it might sound counterintuitive, but actually regulation is a good thing for the industry. It can help you bring in more businesses, more flow. So people sometimes get it the other way around, right?
Right.
And exactly, right? So I want, you can call me on that. Regulation is a good thing. That's good. And actually, at SBI, we took a very similar approach to what SDX has been doing in Switzerland from day one, right? Which is to work with the regulators, helping draft the law itself, right? And provide and write the guidelines, whatever it takes, right, to build this new industry. Actually, we as SBI, we went quite far down that path. And we're actually founding members of Japan STO organization. Actually, the chairman of Digital Asset Holdings is also the chairman of this STO organization. And we were quite lucky, so to speak, to get self-regulated status earlier this year. So basically, we have a certain degree of freedom, right, to come up with new guidelines and whatever we think makes sense, right, for this STO industry to take off. So we want to keep it like that, and hopefully everything goes well. We like to use that as a showcase, how things should be done, that we can take to the other countries in the APAC region and potentially US, South America, you name it.
Fantastic. So we're going to quote Fernando here that good regulation and regulators can spur innovation and encourage entrepreneurship and next generation digital infrastructure. So you heard it here, guys. Fernando said it. You can quote him on it. Okay. Well, look, let's talk a little bit more about the next generation digital infrastructure you guys are going to be building, and let's talk about the liquidity aspect, because I think You are two massive institutions, Sixth Group and SoftBank. You're part of these, very forward-thinking, separate divisions. Do you need to do that as a traditional organization, do you think, in order to allow you to leverage the resources and the, vast amount of experience you've got inside of your institution, but yet allow you to do that innovation that you need to do, which is a different way of thinking. Is that the way bigger institutions should be thinking about innovating and as they're building next generation digital infrastructure, or are there other models? Thoughts on that?
Well, look, I think it was interesting. I was on another panel yesterday with CZ at Binance and Gigi Levy-Weiss, and we had the similar conversation. And let me put it this way: the new players in the space, and I'm going to point to players like CZ at Binance and the other big crypto exchanges. They've had a great run and will continue to do well in an asset class that grew up very quickly, and liquidity was there. And it started as retail. It's become more institutional. Right. I think both SBI and SDX are focused on that marketplace as well. And you can see and you can imagine that we would be looking to help institutional access to that market in Singapore when we set up as well. But here's the thing: we're looking beyond that. Let's for a second look beyond the important move towards institutional crypto adoption, and let's look at digital asset adoption. Regulated securities. We're talking about equity. We're talking about debt and loans, bonds. Talking about structured products and fund structures. The lifeblood of the institutional wholesale capital markets. Now that is a market that has not transferred yet into the digital realm. And I think you're going to find, and I think that the big incumbent crypto exchanges are finding.
Is it me, or has Tim frozen? It's Tim, right?
I think so.
All right, Tim, we will hope you come back. But Fernando, over to you. What are your thoughts around how do the incumbents like yourselves really innovate and build out next generation digital infrastructure with respect to traditional financial instruments?
Yeah, absolutely. So for us, the focus, has been to try and build the foundation, right? By foundation, we mean asset issuance platform. It also means having proper custody services for cryptocurrencies, and also CSDs when it comes to security tokens, right? That's one of the reasons that we as SBI have spent almost 3 years building that foundation. We started with the custody side of things, and on top of that, we added all the regulatory requirements, reporting. Things like the access control, who gets to approve what. We did all the boring stuff that someone needs to do, right? That's the basic plumbing that unless you have there and your assets get lost, right, then who's to blame for that? Who's going to be focusing on that? So we put all those efforts to build what we call SBI Wallet, and that's one of the key building blocks for this new plumbing that we've been building. And then when we started with our engagement with SIX, we found that the focus had actually been more on the building the trading platform and the issuance side of things, right? That's why SDX and SBI will be bringing to this joint venture not only people, time, and funds, but actually each other's IP. We SBI have been focusing on this custody side of things for a while, and SDS has done a great job building all the infrastructure, all the technology that you need for primary, secondary markets, right? So we are putting all that together, and first in Singapore, see how it goes, and then we'll take it to other jurisdictions, mainly in the APAC region. And I'd like to tell you that the feedback that we gotten from big institutional investors is that with such a kind of plumbing in place that is compliant with all the regulations in all the jurisdictions they care about, Singapore, Europe, Japan, you name it, now they are kind of willing to take the plunge. We are basically providing a lot of clarity, and we take care of all the heavy lifting on their behalf, and we take care of compliance, so they know what to expect. And on top of that, because especially with the cryptocurrencies, things will eventually break, right? And you might get hacked. There's no such a thing as perfect security. So we added the insurance component to that. We've been working with London for a while, and we got a significant capacity, right? That is enough to serve at least the initial batch of clients that we're going to have in the pipeline.
Fernando, you've mentioned many very, very critical things here. And Tim, glad to have you back. Picking back up on the topic, I mean, let's think about what you guys are trying to do here. And I think this should not be underestimated, the amount of significant, number of pieces that you're putting here. You've got an end-to-end regulated trading platform, custody, compliant reporting, auditing, all of that stuff, so that an institutional client can have absolute confidence, and insurance, let's not forget the insurance part, absolute end-to-end service and coverage, so that an institutional client, no matter what size, would have confidence in coming into this digital asset cryptocurrency market. That's a big deal. And that's actually a gap that we've seen with some of the younger crypto exchange only markets. And I think what you guys are doing and building is absolutely a game changer. And then add to that, Tim, we've had this conversation before, SDX looking at traditional instruments and bringing and digitizing all of those, which you were just talking about. Imagine marrying all of those pieces together so that an investor can invest and trade any of those asset classes. That's the holy grail. I mean, that literally is what's going to happen.
Well, that's the holy grail, and it's again, if we look back to where we come from, where take something like equity and equity derivatives or bonds and their derivatives, right? The purchase of assets and the hedging of assets is again the lifeblood of wholesale institutional capital markets. This is what allows large markets to form. It's why you're seeing in the crypto space so much focus on the derivative side, because you need these different pieces of the puzzle. Now, in the past, this was all done on different rails, different exchanges, different financial market infrastructure, pieces of that puzzle, different clearing houses, different reporting systems. And ultimately, what that's done is it's created unnecessary siloed pieces of our infrastructure in our world. This is actually not that useful, and we need to get beyond that. We need to move beyond that in this sort of next phase of the journey. So what we're bringing is that one unified platform and approach that will ultimately do all of the above. Now that's one element of it. Now the other element of it, and we talk about global liquidity. What does that really mean? Well, the idea that on a particular exchange at a given time, that in a given time zone you have a time window from one time to another where everybody can trade is actually quite antiquated. Again, the crypto markets have shown this to be true. They're 24/7, and it's no obvious shift for the institutional markets to go from the current model to a much more 24/7 or even a 24/5. Looks like we've lost Sandra this time, so we're on our own, Fernando. And what we need to do is sort of move beyond that. Now, if we're going to move beyond that, we need to have multiple venues around the world that trade similar assets. So now we're not just talking about having one venue that trades on very unified rails with all the things that you were talking about, Fernando, covered for you for all those asset classes. But we need to be able to move from one time zone to another. And that's a huge part of our partnership here, very much explicitly thinking about how would we connect Japan and Singapore and Switzerland and ultimately beyond. We have aspirations very openly to think beyond that, one step at a time though. And ultimately connect them up. So aspirationally, an investor in Japan who wants access to Swiss equities should be able to do that. Where might they go? They might go initially to the Singapore exchange. And that's a picture which has really got to play out. And I don't think anyone's really made a step in that direction yet, Fernando. I think we're the first ones to really make that bold move.
I agree with you. I mean, of course, I mean, each country will always have its own idiosyncrasies, right? I would say. That said, I think alignment at the foundational level is possible and desirable, at least in 3 different areas, I would say. One is custody services and CSDs. Other is settlement processes, right? So we can do like cross-border real-time DBP settlement, and we can basically keep track of assets across borders, and that's going to be key. And the other is like having common KYC, AML, SFT, and CFT processes, right? If you get onboarded in Switzerland, right, you should be able to do, basically have access to financial services in Singapore or Japan or any country that is part of this consortium that SDX and SBI policy are trying to build. But as of today, even in places like the European Union, right, you have a bank account in France, right, and then you go to, let's say, Germany, even it's the same bank, and you want those bank services, you still need to go through the whole KYC process again, right? And the same applies to institutions, right? And also to AML checks, CFTs, all the KYC checks, and you've been clear. They say in Switzerland, the regulator decided I'm not a terrorist, right? That should be good enough for me to go to Japan and US, you name it, and be able to bypass all those checks, right? But that's not the case. So I think that without having this common foundation across all different jurisdictions, right, we cannot build actual global markets. That's what just won't happen. So, and I think both Tim and I have one reason being engaging with the regulators from day one is we're trying to head in that direction. And for that, you need to lobby, drive people. And of course, we are aware this is going to take 5 years, 10 years, but eventually it's not an if, it's a when, right? And we want to speed up the whole process. I would say that's one of the goals of our joint venture.
And I pick up on that, the journey. Let's talk about the journey. This has been a multi-year journey already for our institutions. This is not new territory for us. We know what we're getting into. We've built this kind of infrastructure before. We've dealt with, as you rightly said, Fernando, the challenges of bringing a regulator along with you, partnering with a regulator, changing the law when it's required, with lobbying and support from all the right players. But we know this is going to take a long time. We don't anticipate going live in 2022 and suddenly everything is there with this global network. We think we're in it for the long haul, and that disruption that we talked about right at the beginning, this idea of and to be clear, from a SIX perspective, we don't know when it's going to happen. We don't know how it's going to happen, but we anticipate that it will happen, that the traditional infrastructures that we run, the Swiss Stock Exchange, the Spanish Stock Exchange, the Swiss CSD, Iberclear in Spain, that they ultimately will transition to this new infrastructure. And then we've got a commonality. And hopefully by then, let's fast forward to 2030, just like yesterday's panel with CZ and Gigi. We're talking about multiple locations, an ICSD framework. And I love the way you said that, Fernando. If an investor comes in one part of the world, the level of regulatory harmony that we're going to need to see, and that we want to be a part of bringing as a starting point Switzerland, Singapore, and Japan into some level of harmony on how these markets are going to work, will be so important to reduce the frictions further. And I think, Fernando, you can agree with me that the reason we're doing this is ultimately to generate faster, better, cheaper capital markets for the institutions that own us and work with us. And that ultimately has a material effect on society. If we can reduce that cost base, if we can increase the capital formation dynamic and allow more companies easier access to different financial instruments through this kind of substrate that we're building, and we know that we will partner with many, many more going forward, then that's a material effect that we can see on society. That has a GDP effect, right, Fernando?
Absolutely. I also think that this is going to benefit all the stakeholders, right? for the investors, right? It will give, access to certain investment vehicles and wealth creation vehicles that were only available to, the top 1% to everyone, right? It's they're going to democratize many asset classes, right? And that's one aspect. And the other is for companies like SMEs trying to raise capital that don't want to go through the hassle of trying to do an IPO, and they could use a venue like the one that we are building to do their own issuances, right? And at a much lower cost. And for bigger issuances, right, we can help with the fees or remove intermediaries. We can bring more liquidity by creating this global network. And when it comes to regulators, by using DLT technology, you'll be able to basically make all the process more transparent. So it will allow you, for risk management, what's going on. The regulators also will see what's going on in real time. You don't need to wait for end of day reports or monthly, reports to the central bank, right? You will always know what's going on. So honestly, I think it's beneficial for everyone, right? And that's why I think it's bound to happen.
I agree, Fernando, and you make me think of the new business model angle, and maybe that's a good angle for us to jump into next. We are, as we've said, we're operating the current market structure now. Our institutions are more than adept at this. We understand how this works, but we anticipate that framework is going to change, and we don't think that business will be done in exactly the same way. I think one of the great things that crypto markets have done is to kind of shake up our perspective a little bit. It's not necessarily true that the same intermediaries, the same players in the market have the same roles and responsibilities in the new world than they did in the old world. And then we've got new asset classes as well. We've got this notion that, yes, we are going to see classic debt and equity. You talked about SME financing, which I think is a huge part of it. But, private markets are seen as a very big growing asset class. Yep. That's something that we anticipate servicing and offering for our clients through this new Singapore-based exchange together. But then there's a whole nother class of assets where crypto is kind of the sharp end of the wedge here, where we don't even know what asset classes are kind of like. We kind of need the market to be creative, and we want to be a venue where they can bring these new asset classes to the table. So some examples that I might cite, and Fernando, I'm sure you have some as well, is, well, real estate is one. Now, real estate, it's not like there aren't there isn't a vast amount of assets being traded in the public markets, as it were, in the real estate space, but there is also a huge swathe of real estate that simply isn't tradable, isn't in some sort of traded format, and yep. It's a big goal for us to provide the infrastructure where a lot more of that real estate related assets, and I'm sure they will get really kind of interesting in how they are structured and who is buying and selling them. That they can bring them to market. But there are others too, Fernando.
Yeah, absolutely. We've been looking to things like art for a while, even before we started this partnership with SDX and the Six Group. That's an asset class that has been traditionally available only to the wealthy class, so to speak, right? But the returns can be pretty high, right? You look at the art market, it's been just going up like for decades, right? So how do you get exposure to that? And if you're not in that, let's say salary range, right? How do you democratize all these asset classes that were only available to the few? This is where DLT technology and blockchain in general, right, can help by tokenizing all of that and making that available to the wider public. And this is quite important for a company like SBI, because we started as a retail-focused business. In Japan, just to let you know, we have pretty close to more than 20 million actually retail clients, and we are offering things like gold these days, right? For us, that was quite a big thing, right, when it happened 3-4 years ago. But I did all of these new asset classes, including art and real estate, that we like to make available to our retail user base, because so they can reap the benefits of those booming markets, and because that's wealth creation that will percolate, to the common people. So that's one of the reasons they are really committed to this vision, and we think that digital assets is not only for the few, but again, it's going to be contribution to the wider society.
I love that, Fernando. You said the magic words, democracy and democratized access. Again, this is something we talked about yesterday on the panel with CZ and Gigi, that DeFi. I always say, well, the real DeFi, please stand up, because DeFi, which stands for decentralized finance. And by the way, for the record, I'm a supporter of that movement. I think it's going to be interesting to see how that goes institutional, and we see some new methods for effectively, where to place capital and how to generate returns. I think it's a fascinating and really valuable evolution in the 21st century. But decentralization is a means to an end. The end. And a lot of the infrastructure that's ended up having to be built around the decentralized networks, Bitcoin and Ethereum as the most prolific examples, is centralized infrastructure. So let's not debate whether it's decentralized or centralized. Let's instead focus on what you're saying, Fernando, and we agree. It's democratized access to products and services for governments, corporations, and individuals. Now, this is an area that we at SIX are new to. We are a institutional player. That's part of the reason that we want to work with SBI. The SBI is not just an institutional player. You're also a prominent retail player. And somewhere in there, that's another silo that needs to be broken down. There's the asset class silos, there's the jurisdiction silos, there's the regulatory silos, there's the technology silos. And then there's the sort of the way in which we've segmented these markets into sort of retail, high net worth, and then institutional. In this new world that we're building, we should be able to service all of the above, and the intersection of those is probably where we're going to see some real value for all of the other players. The more retail players in the market, the better it is for the institutions. The more institutional players in, the more liquidity, the better it is for the retail players. And somehow that's never really happened in a credible way. And I think now we're in a position to try and make that happen.
I agree.
So Sandra has unfortunately had some technical issues, as I did a little bit earlier. I guess welcome to 2020.
Can you guys see me now?
There you go. We're back.
Yep. I had to improvise. I don't think you guys need me, but I'm back for the last few minutes. My laptop is completely melted down, so we've improvised to the phone. Luckily, we've got multiple devices, right? Really appreciate you guys talking about the positive elements of next generation capital markets. Increased access, tokenization, fractionalization is going to allow for more people to get a piece of the pie. I think that's very valuable, and I'm so glad that you guys mentioned that. It is not about building the same thing over again. It's how can we do it better? And that's what you guys are doing. So look, my understanding is you've got about another 9 minutes. I'd love for you guys to talk a little bit futuristically. Let's talk about the future and what an ideal world looks like. The JV is a success 5 years from now. Everything is just going gangbusters. How do you see the landscape? Is it and I'm just making it up, is it a, SBI digital bank with a, Novi wallet, SBI wallet? DSX is doing all kinds of digital issuance across bonds, equities, every asset class, you can name it. What is that world in 5 years from now, or 5 years plus?
So let me start. So honestly, for me, the measure of success will be whether we, as one of the hopefully main builders of the foundation layer, can make a meaningful contribution to the creation of a healthy global digital asset ecosystem that should cover the whole value chain of capital markets. It should be just issuance. It shouldn't be just secondary market. It shouldn't be just custody. We need the whole value chain, and I think that SBI with SDX help, but down the road, I'm pretty sure with another partners we'll be able to get there. That said, I won't lie to you. We, as a for-profit organization,
right,
we benefit from the first mover advantage, of course, but we are also realistic and understand that this will, be an industry-wide effort with both new and old players, and with very significant ramifications in other industries and society at large. So we are really looking forward to building the partnership that will allow us, right, to realize this vision. One of the reasons that we're partnered with the, SDX is that they are like-minded and they can help us bootstrap this whole process. But honestly, even with this partnership, that's not enough. We want this to be global. We need more partners, both within the industry, other industries, but we are talking about things like trade finance. So the ramifications of it will even affect my wife, my parents. Do you know what I mean? So I think that's going to be one of the main focuses, building this network, right? And again, hopefully we benefit from the first mover advantage. Let's see how it goes. What do you think, man?
I love that view. Let's go into this next leg of the journey as an industry and look beyond our industry. This has been arguably an industry that has grown up with a very kind of Friedman-esque shareholder primacy directive going back to the 70s and 80s. And it's created a particular kind of adversarial view, I think, especially in financial services. It's not as collaborative as, although sometimes it thinks it is. It's really not as some other industries. And it's also created a very short-term sort of view. It's a quarterly, the quarterly cycle that we all know.
right.
There is an opportunity, and I really love that Fernando said it that way. To think beyond our current model, and other industries that are adjacent are great opportunities. Now, one of the ones that I'm a little bit more speculative on today, but I think is something that on a 5-year horizon we should be able to say, here's a measure of us actually doing what we said, that we got out of our own heads and we moved into a new world. Is something like insurance. Insurance itself really could deal with much more fluid capability to shift risk around than it currently does. And if we are able to provide that, and it's interesting that, and you mentioned, Fernando, your wife, your parents, my family, our families, our society, we rely on insurance every day. That's something that we know in this new world where there's going to be less full car ownership and more kind of renting a car for a period of time, and that model, that the sort of the gig economy that is starting to come up, where we take pieces of things for a while, is going to need a new institutional wholesale capital market to support it. We need to be there for that. Are we going to be talking to automobile manufacturers? Are we going to be talking to the airlines and the travel industry about what they need in order to facilitate new products and services that make our lives better, so that one day when we can stop this whole virtual thing and we're actually back in a room once again for the next Singapore FinTech Festival, and 5 years from now, that we got there with a very different set of underlying support. And we're building the substrate for that. We're part of that future state. So I think Fernando is right. Yes, let's be profitable. Let's show the way, but let's also show the way for the 5 years after that. That really offers us new, the equivalent of an Uber in our world. What's the Uber in our world that we can't even think of yet, that we can't even conceive of yet, where we say, well, of course we should be able to do that. That's the sort of thing that I think we want to be able to promote, Sandra.
Yep.
Amazing. And I couldn't agree with you guys more that, yes, go out there, be as profitable as you can be for your organizations, but let's think about community. Let's think about the society we live in and the impact of what we are building and what we're doing will have for this generation, next generation, et cetera, et cetera. So we are out of time. Unless you guys have any last minute words, I want to thank you for your time. For those who've joined, thank you so much. Thank you to MAS. Thank you to Alistair from SDX. Thank you to the entire Singapore FinTech Festival organizers. Tremendous effort. And again, thank you for the opportunity. And thank you guys for joining us.
Thank you, Sandra. Thank you, Fernando.
Thank
you. Everybody take care out there.
Bye.
Enjoy the ride. Thank you all to join.